Yep.
Okay, awesome. Okay, so again, good evening, everybody. For people who do not know, I am the founder of the daytradingzones.com. We are a research and analyst firm for institutions, hedge funds, money managers, and the retail public. Kevin Stewart is our co-head traders and take care of the live room with me on the retail side. We are both ex-hedge fund traders. We work for prop firms, and I used to work for an hedge fund, JP Capital. Kevin used to have his own small hedge funds, trading options on the SPY. And we have been options and income traders for most of our life. I've been trading for 23 years. Kevin, over 14 years. And hopefully tonight, the stuff that we are going to share with you are going to help you. We trade real money almost every day. Okay, there's days that we just position trade, and this is part of the idea of the income sniper trading process that we want to share with you. So number one, this is an account, a real interactive broker account of our best trader, best student trader. Her name is Penny Krill. She started at the beginning of the year. Penny started at the beginning of the year by taking the mastery with us, where we take a few guys under our wing 2 times a year into a 1-year program. And what happened is that when she started the program for about 4 months, she did not trade really size. Actually, she did about 1 contract at a time. And she started really ramping up a little bit more sizes, not really much more of amount at risk, but sizes over time. And she deposited $32,000. The $32,000 grow up to $116,000. The reason that I am sharing that with you guys is because what's interesting is that Penny has done, and this is always a survey that I do, how many option strategies do you think that Penny has used in our toolbox of about 6 to 7 option strategies? How many option strategies with our support, resistance, and processes do you think that she has used to make that type of a return? So let's make a quick interactive one. So Wayne, how many? Francisco, dos. Dos, tres. Okay, ¿qué más? So we have Ken, 1. Jim, 1. Wayne is a diversifying guy, 50. Joe, 5. Michelle, 4. So what Penny has done for the past almost 10 months now, or 8 months of the year, because we're approaching the end of the year, Penny has done credit spreads. But what she has done is, which is our forte in our community, is to turn credit spread into 2 things. So A, into a defense mechanism back ratio, right? So it's a back ratio defense trade, right? And I'll explain that later on. Or she did B, a max profit trade back ratio on a trade with support and resistance. So essentially, if you've traded income trade before, you have your support, you have a resistance, right? And so let's say the resistance on the SPY is 210, right? And your support is 195, right? And you have a cross-recross, retest of price action, everything is pointing down. So a lot of people are going to take a call credit spread. So let's say you sell, you do the credit spread, the 215, you sell the 215, and you buy the 220s call credit spread, right? What happened is, let's say you do that for 10 contract here, short 10, long 10. Let's say you have an assumption that 210 is your resistance. What happened is, if 210 becomes your resistance now, and it blows through, right, your assumption, goes back and retest the 210, and 210 becomes support and start flying, you are going to start losing money on that credit spread. So what happened is everybody's selling you the soup of the credit spread, but nobody tells you how to defend and maximize profit on the credit spread gone bad. And I'll show you an example later on if I find it, where I had about a $300-400 loss on the credit spread that turned into a $4,000 profit on the SPX. Because what happened is, if I was short 10 calls, long 10 calls on a call credit spread is coming back, I'm starting losing money because my short call starts making me lose money. So what you can do is start buying back some of those short calls. Let's say you buy 2 back, so you short 8, right? And now you are long 10 calls. Are you essentially what? If you're short 8 call, net long 10 calls, what are you essentially in that position? You are essentially net long 2 calls. Does that make sense? Those 10 here plus minus those 8, you're essentially long 2 calls. Well, what happened is if that resistance, which was your assumption, the market was going to go down, and instead it breaks your resistance and your resistance becomes support, as a matter of fact, it starts flying to 10, to 15, to 30. It's a Tesla. It goes to 260, whatever. Now that you back ratio that trade, not only you are stopping the blood of losing on that credit spread, but you start potentially making money on that credit spread that is a lot of money. So what essentially I have trained and be a mentor to Penny and the community with Kevin is how does she goes from step 1, the credit spread, to the back ratio defense to a back ratio max profit. So this also tells you that out of 34 or 36 option strategies available to you guys, you need to be a sniper. You need to know the few things in this business that is going to make you money versus the few things and a lot of things that will distract you to make money. Because this lady who has been with us who has never done a back ratio on the credit spread and made a 245% return on her money as the end of October. And this is like an amazing return. Like most hedge funds don't even achieve that type of return. I have not achieved that type of return this year. So it is very interesting and cool to see that someone who did not have the experience on doing the step A and B on the credit spread has become an expert at timing those around support and resistance. Okay, so now we want to share with you 3 things that we do besides trading real money, is the idea of what is sniper trading? What does it do? When you think about a sniper, you think about a sniper as something who is very precise. You think about someone who is going to do 1 shot, 1 kill. Does that make sense? Can everybody tell me what sniper brings to your mind? What is a sniper, right? That's someone who comes with 20, like an automatic weapon and starts shooting everywhere and whatever sticks to the wall. No, someone that is extremely precise in their steps. So what we do in the community is that we identified the main trend, right, Kevin, versus the intermediary trend. Everyone.
Yeah, and patiently. That's the word that came to my mind, was patiently waiting for that setup. Patiently.
So what happened on the main trend is that most of you guys, when you want to define what a main trend is on your charts and where you are going to do the most relaxed support and resistance trades or reference points in which you can make a lot of money, they are most of the time going to be on your monthly charts and indicators and your weekly charts and indicator. The monthlies plus the weekly pretty much equal what we call the main trend. What we do is we always try to look like poker players to use the intermediary trend. So the intermediary trend is emotional for us. That's where we call that the retail emotions of a 60-minute chart, a daily chart, and a 4-hour chart. And that's the intermediary trend, most aka emotional trend. What we do is we use this emotional trend of the intermediary trend divergence with the main trend to get opportunities. So let me illustrate. If the main trend support is at 200 round number on the SPY, right? And then the intermediary resistance is at 210. And I have, let's say, a signal, a cross retest, lower high. I have a down MACD. I have our power lines pointing down, right? And I have some trend confirmation over a 70% chance that we are going from resistance to support. I'm using that intermediary trend on the charts, your 60-minute daily, 4 hours, okay, going to the main trend support as an emotional gift. Does that make sense? I know the main trend, I know the higher support, I use this intermediary trend as a gift. So if you are a very good trader, you can play the downside and the rebound, but 90% of the people here would be well versed to just wait for that main trend touch and be like the sniper, using and overlaying the right reference point with the right option strategy. So step one, understanding that you want to trade within the main trend. And this is extremely important because a lot of traders do counter trend trades and 90% of the traders lose money. Trading two is identify those reference points in which you are going to trade this main trend and this intermediary trend we just talked about. Step number three, you learn to time, like Penny, our best trader, the timing on when to break those legs on your two-legged trade, whether it's a credit spread or a debit spread, for max defense and max return on your investment. Okay? Now, this is the top of August 24th. You know, I trade real money every day, even on that small accounts. I have 6 accounts. One account is a portfolio margin account, and one account is a retail account. That was my retail account, in which you usually leave $30,000 to $45,000, right? And on August the 24th, at the top of the market, couple of days after the top, right? Here were my positions. You see some of the puts. Bought the puts at $4. They were $24. I had also some back ratio going on. See, I was really 1 plus 20 is 21, plus 10 is 31. 31 minus 25 is net 6 puts. Net 6 puts that gave me really an edge of $14,000 because we timed them perfectly in the market. And this was towards the high in August, and then of course this was the Monday in which we got a nice drop. So we trade real money in our community. Kevin trades real money, I trade real money, and we use real money a case study to explain to you the stuff that we do. So I don't want, because there's a lot of people in this industry that do not trade, and they talk a lot about processes, and they talk a lot about this journey of trading, but very few has really gone through the journey of trading. So Kevin and I have the blood, tears, scars, and successes for the past almost 40 years combined of doing it almost every day, and also waiting patiently for positions to unfold. Let me show you my real account, this small account that we just talked about, and I want to share with you a position, if you don't mind. If we are going to go, can everybody see my Thinkorswim? This is a quick chart, and I'll explain how we do this after, and how we increase the probability of success on our trades with the trends and the edges of the distribution of the statistics of price action and order flow. But if you look carefully here of a trade that I have going on, this is a TLT trade. If I click on that options, you can see when I took the options. Can everybody see that? Quick yes, no, please. That'll be helpful so that I know you guys are in. So this, I took this TLT 128 put on October the 2nd, which means that I took this trade 8 weeks ago. 8 weeks ago, or 2 months ago, because October the 1st to November the 1st to December the 1st, or the 2nd, and we are about the 4th. So I bought patiently this thing as a sniper trade at 591, and it's almost 9. So some people might say, this is not a lot, but slowly but surely, I bought options, and I do a lot of two-legged trades, guys. I always start, this was a two-legged trade. I always start debit spread, credit spread, and always balance my thetas and my deltas. And this trades doesn't look much, but it is a lot. It's over 50% return on your money, right? Yeah, it's over 50, 3 plus 6, it's 9. So it's over 52, 55% ROI. Well, and I don't do much. I am like a sniper. I take it October the 2nd and I wait and I wait. Now, do you notice how much time I had? If there's 43 days left on that trade today, it means that how many days was into that trade? When I took this long put, or at least this debit spread 128, 127, and I broke it down into a net long 128 put. How many days did I use? I used a lot of time, guys. 43 days plus the 2 months that I just told you. So let's say another 60 days. I had like over 100 days to go on that trade. Does that make sense, guys? So when I buy options, and or we do a long play options with low implied volatility towards important resistance and support of October the 2nd on TLT, right? And let me show you where October 2nd TLT was so that you have a visual. So we go to our full Pro Tool, and we're going to do a weekly visual of TLT on October 2nd, or even what? Let's do a daily. And the daily on October the 2nd was right there. Does everybody see it? Quick yes, no, please. Right there. This is the candle. This is the absolute retest. Look, if I put my cursor, right? If I put my cursor right there, it's the absolute retest on October 2nd, right there, of the day trading zone's resistance. Does everybody see it? Because, a chart is worth 1,000 words sometimes, especially when you are French. Okay, so this was October the 2nd. So what we do, this is sniper trading. We go from the most important resistance to the most important support, 118. I'm very close to my target right now. Well, 119.50. So by 1.5, the FOMC is coming, right? And I've held that trade 60 days, 40 days. Now, question to everybody. Does that trade seems like a lot of stress? Started with a debit spread, very neutral, 128, 127. Bought back my short strike of the 127 cost reduction trade. Let the runner go, one contract, 128. From here, right, on October the 2nd to today, right? So the market has dropped about 7-8 points since then, right? Is that a lot? Is that a lot of stress? No. So what we do in our community is we do 2 types of trading. We do 45 days out income trade, credit spreads, right? We do iron butterflies and iron condors. And we do also 45 days to 300 days directional trades, debit spreads that we start breaking from the sniping reference points that are extremely important. Now, is that type of trading more appealing to you than day trading every day? Question. I've done this 23 years. I used to be paid to churn 300,000 stocks and shares a day in stocks a day, because my firm used to clear and they used to be paid on commission that I was churning. Seems to be a better way of trading. So we are going to dig into the sniping trading processes with Kevin that we do, and going one step further in the process, which is one layer further, which is we as traders have that choice. Nobody puts a gun in front of us to have that choice to either gamble every day on a low probability trade or wait for those high probability trades to converge together. And one of the hallmark of gambling, and I urge everybody to go to one of the Gamblers Association or Gamblers Anonymous meeting in your area to understand the 12-step programs of a gambler, because what you want to be is the complete opposite of the gambler, because if you understand the mentality, the process that goes into the mind of a gambler, do you think you can explode that to be part of the 10% that takes the money of the 90% of the gamblers out there? Yes or no? Because 90% of the traders that consistently lose, they consistently lose because without knowing there's gambling steps and not professional steps that are being added to their trading. Okay, so one step we want to explain to you, and I'm going to pass a little bit the voice to Kevin as I'm fighting a cold again, to explain that the second dimension of what we do, it's overlaying the options probability statistics with our own processes of going to the fringes of order flow. See, here, this is the top of our buy zone where we look to sell. Here's the bottom of the sell zone where we look to buy. And in the caution zone, we look to reduce side or go out of the money and not be chop by the market. So Kevin is going to explain the analogy between the normal bell curve distributions and what we do also with our option processes.
Great, thank you, Mark. Appreciate that. So what we do is we really believe that good risk management is equal to good trade location. And what we like to do is, and you've seen on Mark's charts that he showed you earlier, the full Pro Tools, is that we have identified the levels of support and resistance out there, and with our Trade Navigator, we've identified where the institutions and large money, the banks, etc., and the black pools, where they are initiating trades. And so we've defined 9 levels of support and resistance every day, and we send that out to the retail public. And what we've wanted to do here was to show you that this normal bell-shaped curve, as you turn it and rotate it on its side here, that the middle of the distribution where it says first standard deviation, 1 standard deviation minus 1 standard deviation, well, 68% of all of these occurrences, right, of order fills are going to happen in that zone. So it is a non-directional, choppy zone, and we've labeled it the caution zone because it is unless you're selling premium on either side of this zone, you're going to get chopped up. And that's what 90 to 95% of the retail public is getting chopped up out there every day, right? And they basically get frustrated and run out of bullets after the first hour of trade, and they're done. Well, we're sitting there patiently waiting for our setup. When we come out to the edge of the distribution, either the low of the sell zone or the high of the buy zone, and we're fading those moves, right? So just like today, we'll look at that chart here in a second, but today we came down to the low of the sell zone, and there was a bounce buy off of that, and they're following that trade through overnight, right? The big money,
Yeah.
the banks.
So let me show you. What we do also is to make it simple for everybody to understand. Also, we mix tool and processes of option strategies that we know have a high probability of success. Like if you look at the crude, this is our full Pro Tool. They work for every market, and we work those with institutions, and twice a year we integrate that with the retail public. So what happened on those is that when I started trading with multiple screens, the monthly, the weekly, the daily, the 4-hour chart, the 60-minute chart, the 5-minute chart, and I have 27 zones across each screen, and I have to compete against the high-frequency trading systems and the algorithm to make a quick and fast decision. So what I wanted to do is combine everything here that works for me with real money over time, and put it in one chart. So that's what we've done with the Pro tool. And I wanted also between a support and a resistance to have two things. I wanted an immediate change trend like we have in this chart of the crude on the weekly. And then I wanted something that tells me that I want to know if this immediate trend change is BS or not, if it's a sustainable trend change. So those pink dots indicate that there's a 70% every week that it closes with a dot, there's a 70% continuation of that trend for a longer touch from the major zones, which are the dashes. So reference day trading zones 1 here at 105 on the crude, reference 2 here, 70, then reference 3 here around the 40 area. There's a big cluster of zone. We call that a box pretty much, right? And so then the retail public came and say, hey, it would be awesome if you guys can help and help the retail guys on the most important instruments. So we took all that processes and manually enter between 6 a.m. and 8:30 a.m. every day before the market opens on the 10 hottest instruments. Out of those 27 zones, 6 to 9 zones to create the buy zone, caution zone, sell zones out of all the indicators that we see in the full Pro tool that works for every instrument, but requires e-signal or an additional chart. So what we wanted is that people who have brokers like Thinkorswim to be able to come in the morning and boom, have the rundown in the clean chart. See, the full Pro tools are a little bit more clutter to your eyes compared to the retail tools, which are clean: buy zone, caution zone, sell zone, plus the power line. See, the power line is hooking here since yesterday around 94. And you're not going to look for when you have a down hook on the power line and you have candles below the power line, you are not looking for longs, you're looking for shorts. And here you look for shorts where at the top of the caution zone DTZ, which has been proven perfect this morning. And look at this. By 1 or 2 points, the bottom of the DTZ this morning was the bottom of the sell zone. So those the reference point helps you. I'm showing you live charts at this point. Is that what you wanted to show, Kevin? Because look, this is today's.
Yeah, that's perfect. Yeah, that demonstrates. See those buying tails there at that support level at 2040. Well, we saw that all day long, and we just sitting there waiting until the end of the day, and then just bought it up and have some trade overnight back to the power line to that 2068 level. So that's what we're looking for, and that's where we're positioned. Thank you.
And what you have to understand is that sniper trading has some sweet spots. So the bottom of the caution zone is an executable sweet spot. The top of the caution zone is an executable sweet spot. The top of the buy zone is an executable sweet spot. So knowing those zones that are executable and the ones that are crappy helps you avoid a lot of commissions, avoids all. So it's like playing poker, you know. Why would you move your chips when you know that you're already a little too late in relationship to your ranges and breaking your ranges by third? You know, it's very, very important. So this is very important concept, you know, making sure you know your trend, making sure you divide your day, prepare your day to know where you are going to buy, where you're going to sell, where you are going to be cautious. You know, Kevin and I never come in any given day saying, oh, this thing is going straight down and straight up. We are like, okay, it should go down from A to B. As soon as it reaches B, there's a shift of momentum. We have to be careful. We have to pare away our shorts, right? At the very minimum here, we have to pair at the bottom of the sell zone our short and get out and go play golf. If you are really dead set to buy, you buy, and you buy a rebound to what? To the power zone at 2068, 2060 next DTZ zone. So at all time you are being handled where to go and where it's going, and that helps you tremendously to time the back ratios on your credit spread for max defense and max profit. So when you guys come in the morning, you really need to have this type of processes. And most importantly, I cannot repeat it enough, especially this is going to be big in my 2016 game plan, to reduce the numbers of trades and just be more patient, you know. To me, yeah, you know, I don't make a killing, but I make a killing slowly. So when you look at the TLT trade that I took 2 months ago at 5.91 and it's $9 now, okay, it's slowly, sorry, it's slowly but surely. And I don't have to stress it because I bought an option. I started as a two-legged trade, 128, 127 at the top of the range to the DTZ resistance, right? Like I showed you perfectly. And I bought back some of my short. I have one runner, and this thing still have 43 days to go. So I'm not as concerned until it goes to 30 days. There's like sweet spots where you have to start selling your net long calls or puts that you keep for a long time. You know, this is a non-stressful trade. Goes up, goes down. You know, so long before FOMC, I'm out of there, I'm happy. You know, if you look at the full Pro Tool one more time, and you look at that daily chart of October 2nd entry, and I move my trade is right there, October the 2nd, right on this cross-recross of the day trading zones. That was my signal. And my next signal is right here around the 118.50. I'm out. So I'm 1 point away to be out from that runner because I've accomplished my cycle. Cycle A to cycle B, right? And 100 days, I give myself 100 days to accomplish that cycle. I have 43 days to go, and I would like within the next 13 days to complete that cycle. You know, and so this helps us tremendously when we do things. And you guys need to understand that when you look at option strategies, okay, and Kevin can tell you that because he knows a lot about option strategies as well. How many option strategies do you see on that screen? How many option strategies? So we are counting, we're going to do mathematics. 1, 2, 3, 4 times 1, 2, 3, 4, 5, 6, 7, 8, 9. So 4 times 9, what is that? 36? Yeah? So 36 option strategies. Question to everybody, do you need to know those 36 option strategies to be good at what you do? I've proven to you with our best students who almost quadruple their account in 10 months using credit spreads and back ratios that all you need is 2 or 3 that consistently make. So is that pretty cool when you know that you have to remove all the clutter and the pressure on yourself? Instead of being the jack of all trades, you want to be very, very good on 2 or 3 or 4 option strategies that consistently repeat high probability trades around the right support and resistance. Is that more tranquil? You know, one of the most profound things from Steve Jobs, he said that in simplicity you have elegance, but in trading simplicity equals money. I mean, it's a fact. The more you
Can
will
I chime in
simplify.
on that as well, Mark?
Yeah,
You
sure,
know,
go ahead.
yeah, and I was just thinking about that. Let's go back to that chart of today's ES and take a look at that. Look how clean that chart was, and then let's look at that. Let's look at that. Yeah, look how clean that chart is. We've got a power line there, right? And we've got up in the green level there. We're looking to sell it up there if we get the shift of momentum. And look at that MACD. I mean, that is just a simple, basic MACD. But from that, we're able to anticipate price, right? And so momentum precedes price. And if we can remember that, right, and then price is mean reverting, right? If we can remember those things, then we can watch for shifts of momentum and we can watch for those opportunities. Now, one more thing that's simple, Mark. Take a look at that TLT trade again. I just wanted to point out one thing to the audience here. Now, just looking at this TLT trade, let's look at the deltas, right, and look at the theta, all right? Look at that. It cost him less than a McDonald's cup of coffee to have this trade every day, right? It cost him $1.90 to have this trade every day. And for every dollar move of the TLT, he's going to make $90, right? And the faster it moves down, the more his Vega is going to be pumped up and actually add to the negative delta of the trade. And it's just amazing that way. So if we can if we can overlay the correct option strategy, right, for the current volatility environment, which we're expert at, then it gives us an edge, right? So not only do you have trade location as your edge, a momentum as your edge, but we have the correct trade strategy, right, for the correct environment. And so I think that's really key there, and we really take a very simple approach to it every day like that. And, you hear us in the trading room and, we kind of, we're relaxed, because we've been doing it a long time, but we're relaxed with each other and we're relaxed with the students. And in that environment, it's so much easier to learn fast, right?
There's an important point here. You guys see this delta 90 that Kevin has shown. Well, 2 months ago, that delta 90, so you look at the DTZ, so let's go back here, because I want to show you the chart of the power of support and resistance and the expansion of the delta. A lot of people do not equate or understand both of them. So if you look at the entry price, it's here, October the 2nd, on the DTZ resistance. So question to everybody, that day the high is about 126.20, and I'm buying the 128 put. Question to everyone, do you think the 128 put at the 90 delta, yes or no? No, of course not. It's almost at the money at 126. So that delta is probably a delta what? Is that fair to say it's probably a delta 55? Slightly in the money, yes or no? People that are expert in the room on options. Is that fair? Probably a 55 delta, right? Well, if we had a 55 delta here at resistance, and we go from point A to point B, and we go here at point B, or here where we are today, I am at a 90 delta today. Is that a nice expansion of delta? Here goes my 50% plus return on investment. So when you know to take a delta that is not too expensive yet, and understand where support and resistance are and the trend is going to be, it gives you a big edge on what I call expansion of delta from a 55 delta to a 90 delta, which creates a 55% ROI on my trade, in 2 months. Well, I don't know about you, but if you had $1 million account and you go at the bank and you make 55% return on your money, which is $550,000, right? Well, people would kill for that type of returns. People would even kill for a high probability of a 84, 95% chance of success to make 10% a year on their account. So there's a lot of income trade techniques and directional techniques that you can learn when well diversified and with smaller amount at risk, that you can consistently try to be on the side of the people that take the money of the 90% of the people that lose money in this business. Okay, and that's very profound. Yeah. Now, there was another thing I wanted to show you guys. After the 36 strategies, we talked about the focus. This also is important. What do you think make those companies successful? The best run franchises or company in the world? Apple, McDonald's especially. What makes McDonald's a very successful company? Why at McDonald's can I take a kid, a 15-year-old kid, or even a 20-year-old kid with no college education, no high school education, and still make him run a multi-million-dollar store at the corner of where you live? Why is that? What are those successful companies have in common, especially McDonald's? That you as a trader, as a business of a trader, a hedge fund, a prop firm, whatever it is that you are going to do in this business, money manager, financial advisor, what is it that you need? You need, like Alex says, repetitive, consistent processes. And what makes those guys extremely successful is they have the consistent, like Alex says, repetitive, systematic no question asked, second nature processes. And you must have this in your business in order to be successful. Now, couple of option strategies that Kevin can go over. Obviously, we prefer the red ones because we don't care. We break our legs anyway. So we always come up to have a diagonal or debit spread. We dance in a two-legged trade where we could start with a credit spread. The credit spread is broken. It becomes a back ratio. The back ratio is broken. It becomes a debit spread. So it's a dance. But that dance starts where, Kevin? On the high probability option trade.
Yeah,
Does that make
that's right.
sense,
We
everybody?
start with that high probability strategy, and then the other thing is too, as you're breaking legs, then you're not reinitiating trades and just churning over your account with these commissions. That's the other thing too. If you can make some slight adjustments, which a back ratio really begins with a 10% to 30% adjustment. And if you can make those small adjustments, then you're not going to be, getting in, getting out, getting in, getting out, getting in, getting out. It's ridiculous. So you can just make these fine adjustments. And, Mark's pretty humble here, but that TLT trade, we've only been talking about that for weeks and weeks, right? And what's he got left? He's got one contract left, right? That was a 50. It was about a 55 delta or 52 delta. Now it's a 90 delta. Well, he's humble about it, but he's been making money, right, on either side of that trade now for weeks, right? And what he's got left is 450 bucks worth of profit, but he's taken money off repeatedly over the weeks, and so I think he's being more humble about that. But we do like to break our legs and break these two-legged trades apart, take the money out, and then redeploy that capital somewhere else, right? It's called the speed of money, right? Acceleration of money. Very good.
And a little bit of a strategies that we want to help you understand. It's a little more advanced, but if it's the first time that you see it, we always enjoy sharing it with the community. People pay for that. I mean, we trade. It's called our 1, 2, 3 punch strategies of our sniper strategies for higher probability trade. And of course, it depends on implied volatility. We like when the market drops. So guys, let's be interactive. When the market drops, we have something called what in the market? It's the fear factor. The fear factor is your implied volatility. When the market drops, the market or the retailers are becoming more what? Fearful. When there's fear in the market, the implied volatility goes up or your VIX goes up. When that happens, that pumps the premium of your options. When your option premium pump, it's a good time to sell options. So we start selling, let's say, the put credit spread at the bottom of a main trend. And again, all of this depends on support and resistance. Cross, recross, right? Start the put credit spread. We wait for a confirmation higher low, and then we start our directional over 30 days, 45 days. And Kevin will explain to you like our 3 steps, because I like Kevin to explain it because he has been doing it a couple of months now.
Yeah, no worries, no worries. So there's a rhythm to this, right? And so what we're doing is we're anticipating support, right? So as we looked at that chart earlier today, at that 2040 level, we're anticipating support there, right? So what we want to do is, as we drop into the 2040 level, right, is to get some put credit spreads on out of the money. So you've got a margin of safety. You're not sitting there right at the money. You've got a margin of safety out of the money. You've already had, this beyond category move, right, of negative 36 ES points or some ridiculous amount, right? And so, I mean, shoot, just the day before, we're at 2100, and now we're down here at 2050, 2040, right? So anyway, down at the lows, right, we look for a pattern, either a double bottom low or an inverse head and shoulder, right? Some kind of a structural pattern there that tells us, hey, we've got a low in here. It may be a temporary low, but I want to dip my toe in the water, right? I want to bait the hook and see whether or not I get some buyers on this, right? So what we do is just a small size, put credit spreads on SPY, okay, and then wait for this look for the momentum to shift, right, in the MACD, and then see if we can get some higher prices. Now, if we get a higher low and we get some support there and we find some buyers at that higher low, well, guess what? Now I've got a confirmed uptrend, okay? And so at that confirmed uptrend, what I want to do is get some directional calls on. Instead of reaching in my back pocket and saying, well, I'm just going to buy some calls, right? What we'd like to do is we'd like to do a call debit spread, right? Which is buying support and selling resistance, right? So we would be buying the whatever that level is at the S1, we'd be buying that, and we'd be selling that R1 level, or where the number 3 is that he circled, okay? And so that is a call debit spread. So now what we've done is if that happens to run from S1 to R1 very quickly, right? Well, as soon as it hits R1, we can buy back that resistance that we've sold, and we can let some of that long calls run higher, right? Depending on the pace of the market and the context of the market. And if I don't have another resistant level for another 10 or 20 ES points, right? That's another $1 or $2 on SPY. I can let that long run, right? And I don't have to pay any more commissions on setting up a whole new trade. All I can do is buy back my shorts, let the long run. Okay? So when I finally get up to that R2 resistance there, right, then I can start doing some cost reduction play, right? Between R1 and R2, I can start selling above the market, right? I can still call credit spreads above the market to reduce the cost of my existing trades, right? The other thing that I can do once I do get a bid from level 1 to level 2 here, from S1 to R1, is those put credit spreads. I can either add to the put credit spreads, I can move my strike up and resell those put credit spreads, and again, it's a cost reduction play, right? So I'm making money, right, in time decay, right? I'm really the casino, right? I'm making money on time decay, and while I'm supporting a directional long trade, right? So we try to be super creative that way, and again, in the appropriate volatility environment, we have different strategies that are real high probability, and with that accompanied with good trade location and the structural patterns that we're really expert at. I'll tell you what, the probability, the edge is on your side. Thanks, Mark.
So this 1, 2, 3 punch, guys, will really help you if you know to execute it properly with the right amount of size, the right support and resistance, obviously, but we replicate those all the time. This is one of the bases of my $23,000 profit in August that I showed you. It's also one of the principle of Penny's trades. The difference with Penny is that she does not do the credit spread. She does the credit spread here, she does the credit spread, and she starts breaking legs. And there's a lot of timing involved that we are going to talk about Tuesday in our live event at 8 p.m., which is, by the way, the last Day Trading Zones public event of 2015. So we are excited because after that, we're all going to go on vacation for a couple of weeks. And as usual, towards the end of December, mid-December, I slow down, although this year it might be different with the special FOMC that everybody is looking forward to. But we are looking forward to this event. This is going to be an event that is going to be going over, it's really the processes of low risk, high reward income trades that we do with the sniper trading income processes that we've touched based on tonight with everybody. Kevin and I will be there. We'll show you how we use our screens and our morning processes to go from our support resistance, the full pro tool, the buy zone, caution zones, and the execution of the trades. It's going to be next Tuesday, everybody, at 8 p.m. Everybody is invited. It's a free event. It will be the secret to finding low risk, high profit recurring income trade. I don't know if Kevin has the link for that event. There was some link, or Kevin Stewart, maybe you have that link from the Skype, and we can post it in the room. You guys just have to register for this event. We'll understand also the role of support and resistance in timing to understand how to place your strike and debit spread and credit spread, how to understand the implied volatility on your trades, which trades to do at which levels, which type of implied volatility conduct which type of trading. Okay, so it's very key.
Sorry to interrupt you. That link is in the chat, everybody. It's realtraderswebinar.com/free DTZ. So it's in the chat if you want to pull that up. There you go.
Right, it's right there on the screen, realtraders.com/free DTZ. So we are not selling anything tonight, guys. We just wanted to share some processes. We feel confident that if you get to know the stuff that we do, all we ask is that you give yourself a chance to become a better trader that trades with high probability of success. Instead of shooting blanks every day, many trades, many commissions, not a lot of success, not a lot of consistent income, not a lot of real money traded, you have an opportunity next week to be part of our community in that last free 2015 event at 8 p.m. And we're looking forward to seeing you. The link again is there, realtraderswebinar.com/free DTZ. Kevin and I have just got a text from Kevin at Real Traders Webinar. We have about 10 minutes to 5 minutes to answer any Q&A. If you guys have questions, we'll be glad to answer some of your questions, guys. Okay?
Yeah, Bob's asking, well, so if we make lots of money, why do we teach, right?
That's a good question.
It's a good question. You want to answer that one first? I mean, it's a legacy thing for us. It really is a legacy for us.
We have been helping Bob. I mean, we are not saying that Day Trading Zone is a charitable contribution organization by any means. But we have been doing this for 40 years, Bob. We've 3 times achieved millionaire status that has been documented with our trades. We have our trader Penny, which to us is even more telling. This lady, probably you arrived late today, or maybe you've been before to some of our events. Today, it's not really about us. It's about people like you. Can the stuff that we show you, help you achieve results like that lady who put $32,000 and in less than 10 months in her interactive broker achieved $116,000. Can those processes help you, And I think if you stay engaged in what we do, hopefully it will help you, Bob, and if it's not for you, there's no hard feeling. We have helped thousands of people for the past 13 years, just like you. Okay.
And the other thing that we say all the time is, it keeps us sharp, right? Because instead of going to the office and trading with a group of other traders, right, we're, individually, at our own houses, right, trading, in our offices. And so what it does is it keeps us engaged, We get up and shower and shave and we're ready to go, Otherwise, we're walking around in slippers all day, and we don't want to do that. So it keeps us engaged and involved.
I want to see you in slippers.
It's scary. So, and the other thing is too, while we're in the trading room, you're a crack up. While we're in the trading room, it's like a trading squad, right? And so we all want to be specialists. I say, hey, I got LG from the Bay Area, and he's a specialist in Facebook, and I got Eddie out in Phoenix, and he's a specialist in Netflix. And so I got, hey, these guys are, when we're talking about the market technicals, in the setup before the market even opens, right? Because we started at 5:30 Pacific time. We're looking at the market for about 45 minutes, take a little break, and then we start trading. And so we're looking for the best setups, right? It's like, hey, I got 10 instruments, 11 instruments that we're looking at. give me what's the best two setups? Okay, let's go for this. You know, this is a long setup day. Let's get on Google and Netflix. It's a short
Right.
setup day. Let's get on these other trades.
So Osman is asking if we have a trading alert or we do better than a trading alert. Our philosophy, or my philosophy as the founder of the company since 2002, was to always teach people how to fish instead of feeding you a fish for a day. So we have learned over the time that it's cool to be able to feed you a couple of fishes as you learn to trade and refine your technique and learn the business, but earn as you learn. So on Tuesday, Thursdays, and Friday, we go live. We go over our trade philosophy. We also, like lately, because it's the end of the year, I help my guys be set up for retirement plans for the wealthy. I connected some of my guys with my accountant and financial advisor processes on how to save a lot of money and creating retirement plans on steroids. And we do a lot of stuff like this. We are income traders. We are tax deferred traders. We are tax-free income traders. There's a lot of stuff that we do that it's all about accumulating wealth to us. It's not about doing 1,000 trades a day. It's not what we do. I used to do that. I used to be paid to do that, and I learned to do it the right way. Francisco, is it possible to use these strategies with a cash account, or are you required to have a margin account? And that's a good question. If you will need a margin account to do the credit spread, so long you don't go over the pattern day traders requirements. I think it's 3 or 4 round trip in 3-4 days or whatever it is, then you'll be okay. But otherwise, if you get in and out of those income trades every day, then you are going to trigger pattern day trader in a status unless you have $25,000 in your account. So yes, you can have margin. Yes, you can have a cash account. Okay, and you can do both. You can do some of those directional plays in, out, without being tagged as a pattern day trader, but that you would have to open a cash account. But when you open a cash account, you cannot do the two-legged trade. Next, Herman, you are welcome to visit our site, daytradingzones.com, and go to the services page, and you can see all the stuff we have and we offer for everybody. Guys, hopefully this was helpful. Again, we are looking forward to seeing you. Hopefully this helped tonight and help you think about your trading a little differently than what you have approached it so far. Again, if you want to join this event, our last event, Tuesday, suggest you sign up. We have 1,000 seats available, and we always are close or above capacity. We have a database of over 100,000 traders. We've done this for 13 years. Daytradingzones.com. In this particular instance, you'll have to go through our partners from realtraderswebinar.com/free DTZ. Okay, and again, you have the link in your control and members area. Hey, everyone, hopefully that was helpful. And that's it. Okay. CJ, I believe, Kevin, did you put a link? I believe you did put a link.
Yeah, guys, it's right there in the chat box. If you look in the chat box, you should be able to see the link there. You should be able to see the link there. You should be able to just click and go.
Okay, awesome, Kevin. So hopefully we are not too much over time. It's 9:02, Kevin. I tried my best.
It was perfect. It was perfect. Thank you so much, Mark. Thank you so much, Kevin.
Okay, thanks, guys.
And
Thank
guys,
you, everyone, for your time.
Guys, definitely go over to that link. Make sure you sign up. The cool thing about Mark and Kevin, as you can tell, like I said earlier, they always crush it. If you go over to our YouTube channel, you'll see that they're by far highest rated and most popular webinars. As you can tell from webinars like tonight and Tuesday will be no exception. They'll do it again. They'll be teaching a different topic and they'll blow you away again. So definitely sign up for that webinar for free. And again, there's not many people that come in here and they're just willing to just share and not sell anything at the end. Just say, hey, come to another event. There's not many people that do that, but so that just makes them that much more special.